All right, everyone, this is the last video in the series of workbook exercise videos for chapter 12. And the final problem we're going to take a look at here is AP 19B. And in this problem, it tells us that we have this company, toy retailer. We operate in a city where the combined state and local sales tax rate is 8%. And during August 2018, we had the two following transactions here. Okay, so it gives us some information. We kind of got to think back to our inventory accounting chapter, so that's a little bit of a we'll revisit that, but hopefully we have those skills at this point, so nothing too difficult. But we're just going to add in this concept of sales tax, which is a real piece, and that we kind of ignored, in earlier chapters when we were talking about inventory, sales transactions, etc. So let's go ahead and fill out. I got this little table here that we can fill out. And so the sales revenue that we charged on the 12th was $2,000. It told us the tax rate was 8%, and that'll be the same for both. And so to find the amount of sales tax that we need to collect from the customer, you just multiply the tax rate times, the sales revenue, basically. So I'm just going to drag that formula down, and then we're just going to fill in the second transaction on the 15th. And so we've got $400 we need to collect for the second sale and $160 for the one on the 12th, basically. So pretty simple math, just got to understand what's happening here. Again, we are collecting this money. It's kind of like unearned revenue almost in a way, right? Where we're getting cash, but it's not ours. Same thing with the payroll liabilities. We withhold that money from the employee, and it's not our money. We're remitting it to the government on behalf of the employees, right? And that's going to be the same thing here. We're going to be remitting this money really on behalf of the customer, essentially. But it's our duty as the business owner to do that. And that's just part of doing business. Okay, so remember when we were doing the inventory transactions earlier, we would record sales revenue. We would record, not debit. We would record accounts receivable, sales revenue, cost of goods sold, write it out, or I'll just do COGS. Remember COGS, cost of goods sold, and then inventory. Let me format paint these. And so that would be, if we totally ignored the sales taxes like we did previously, and we were looking at these same transactions, then we would basically record this transaction for $2,000. We're going to receive that $2,000, in the future, or it could be cash too. It doesn't matter if it was AR or cash. We'll use cash just because it's a customer payment in this example. So we were ignoring sales taxes in this example. It tells us what cost of goods sold was. Right, so we would have that as a journal entry, and our gross profit, remember, would be $2,000 minus $1,100, so we'd be making $900 of gross profit after your revenues minus expenses. But now we're going to add in the extra wrinkle of sales taxes here and the collections on those from the customer, essentially. And the way that the book does these inventory transactions is it splits them out into two separate journal entries. A lot of times you just see them together as one with the sales revenue and the cost of goods sold piece. But let's separate these out to match with the book. And for our sales revenue portion, we're talking about cash. This is the final customer is paying. And so we're going to indent. We're going to earn some revenue, and that's the same as it was before, $2,000, no difference there. But now we're collecting some sales tax from the customer here. So sales tax payable. So we're getting the cash from the customer, but it's not our money, right? So it's a liability. It's in our bank account, for example, but we need to send this money to the government at a certain specified quarterly period or whatever the frequency is. And so the total cash that we collect is not the $2,000 just for the sale, but we have to collect the extra piece that that's the sales tax piece that the customer is paying. And we'll just say cash sale Okay, and then that's our explanation there. So that's the revenue portion, right? And this is what I was saying is the book really like splits it out into two separate entries, and then the other entry is no different from what we just looked at. It's the same old. Inventory goes down, cost of goods sold expense goes up. We still have the same gross profit, right? Nothing's changed in terms of the revenue that you've earned, or the expenses that you incurred in the inventory side or anything like that. The only difference is that now the customer gave us an extra $160 because it's a requirement from the government, and so we have to account for the fact that our bank account now has an extra $160 in it, but we need to record that is related to an amount that we need to send to the government. So it's nothing to do with us, really. As the business, we're just kind of this middleman collecting this money from the employee and then sending it on to the government later. So we'll say record inventory sold. But this bottom transaction, if you do separate them like this is exactly the same as it would have been if you were talking about the other, the way we recorded the older chapter, etc. Okay, I'm going to copy these journal entries because I think we're going to have some real similarities here in our journal entry we recorded the second time. The one difference, it says on account, right? This one was for cash, and we'll just say sale on account. So no difference, other than we're now booking an accounts receivable. The amount, is 5,000. Let's go ahead and link that. The sales tax payable is the 4,000. The revenue, or sorry, I should have done the revenue there. The revenue is 5,000. The cash that we collect is 5,400. Okay, and then it tells us 2,800 for the cost of goods sold. Again, no change there. Same exact thing, but yeah, we're just collecting extra money from the customer basically, but it's really just a pass through because the customer gives us the money, we hold on to it. It's an asset that goes up and it's a liability. So there's nothing really that's interesting about those amounts necessarily. It's just, like I said, a pass through that we eventually will remit those funds to, the government, or like when we were looking at, in this instance for sales tax, it is going to a government entity, a state usually is how that works. You're paying your sales tax to a specific state government organization, and then they do with it whatever they do, and it gets used for paying for different things. And that's pretty much how sales taxes are accounted for. Again, it's not really an expense or anything like that on the business side. If you buy something as a business, right, and you have to pay some sales tax on purchasing a piece of equipment or whatever it might be, then potentially, that could be an expense. Usually if you're paying sales tax on something, right, and sales tax on small things will be an expense. On bigger things, if you buy a new vehicle, for example, the value, the amount you pay for getting that vehicle and the sales tax and everything, you will just group that all in as the cost of the vehicle in total. But I'm getting a little bit off topic now. But sales tax, it can be a business expense, but in this instance, when we're talking about collecting sales tax from customers, we are just a pass-through middleman to get the money from the customer and later to send it to the government, basically. So that's why we do the liability, and it is cash that they're giving us. So, all right, well, hopefully that was illuminating, and this is something that affects us in everyday life. So again, a lot of these types of transactions for the liabilities and things sort of overlap with real life scenarios. So hopefully it's kind of interesting to see how the accounting connects to your actual day to day. And that wraps up the chapter 12 workbook exercise series of homework. So I appreciate you guys all watching along. And I will see you in the next video series or in class. And I hope you all have a nice day. All right, bye.